what's going on, everybody? Hey, welcome back to another training video lesson. And in this lesson, boy, I've got a good one for you. We're going to talk about the squeeze, how to trade the TTM squeeze setup. But what is the best way to trade it? All right, everybody. So, hey, before we go look in the charts, let's just start off. Let's take a step back and let's talk about just the TTM squeeze setup in general. I've got some PowerPoint slides, and then we're going to go look at the chart and the setups. Now, people that are talking about the squeeze, so these PowerPoint slides, they are nothing that you've never seen before if you watch the squeeze. But my goal is, as I'm talking through the slides, deliver the message and speak in a way that maybe if you're still struggling with the TTM squeeze, you get, okay? But the TTM squeeze was created by John Carter, who you guys know was Simpler Trading. I did not create the TTM squeeze. And so they're the masterminds, or he's the mastermind behind it. And it's really interesting because I traded the squeeze for many years and didn't even know that it was the actual squeeze, okay? But it's by John Carter with Simpler Trading, who I am affiliated with. If you check down below, you'll see the indicators that I offer for him. So let's go ahead and jump into this. So the TTM squeeze setup, technically, a stock is in a squeeze when the Bollinger Bands are contracting inside the Keltner channels. Now, some of you have the Bollinger Bands on your chart. Some of you might have the Keltner channels. But what just John Carter came up with is he noticed that when the Bollinger Bands were contracting inside the Keltner channels, that caused what he called the TTM squeeze, or it's the volatility contraction. So just technically, I want you to understand. Now, you don't need the Bollinger Bands on your chart. You don't need the Keltner channels. I use the Bollinger Bands for a different purpose, but the TTM squeeze setup technically is whenever the Bollinger Bands are inside the Keltner channel. So I just want you to visually get that right now as we work our way through this presentation. All right, so the TTM squeeze setup. A setup occurs when a stock enters into a tight consolidation range on a given time frame. Volatility is contracting. So again, it's a very tight range, and it can happen on any time frame. 1 minute, 5 minute, 10 minute, 15 minute, daily, weekly, it doesn't matter. So that's why I put on any given time frame, because regardless of the time frame that you are watching, this squeeze, which is a volatility contracting, right? Bollinger Bands inside the Keltner channel, it can occur. Just want you to know that for a lot of you that are brand new with the squeeze. Now, I want you to, here's an analogy. And again, a lot of people say this analogy. I didn't come up with it. I got another one that I'll talk about in a second, but I want you to think of a rubber band, right, that's stretched. You got this rubber band, you're stretching it. So the further you pull the band, the more energy that's been building up. So grabbing and pulling it, it's tightening, it's tightening, it's tightening, energy, 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 energy. And what happens is if you stretch it far enough, pop, right? That band, bam, it releases that energy. So what I want you to think of, I'm going to give you two things, but is the rubber band, right? That analogy. So when a stock is in a squeeze, the volatility is contracting, the energy's building just like the rubber band. Now, another way is I use the analogy of a sprinter. So let's say you run the 100-yard dash, right? You get in the blocks, boom, you sprint. When you're done, you don't immediately go jump into the next race. What you do is, first of all, when you're done, you walk around the track, you might slightly jog, sit down, take a break, right, before your next move or before your next run. So that's the way that I want you to think about the squeeze. The stock is in a squeeze, right? It's resting, it's resting, it's resting. Bam! You take off for the 100-yard dash. Whenever the energy is released, and we'll talk, again, we're going to go into detail about it, that energy comes to a halt, starts to slow back down. That's whenever the runner's done with the race. They're setting up, right? Or the trend. So another thing is a stock in a squeeze, like we talked about, it's like the rubber band being stretched before that release of energy. Okay, now I use this word AKA fires because a lot of you that trade the squeeze, or those of you that are new, which you know I love the squeeze, right? I love the squeeze. I talk about it all the time. We use the terminology, it fired, right? So AKA it fires, and what that means is That's that release of energy, right? It's going sideways because the band is, again, you're pulling it, you're pulling it, you're pulling it. Bam! It fires, stock shoots off, right? In the direction up or down, which we'll talk about more about that. And I'll give you guys some tips on helping you, determine which direction the squeeze is going to fire. All right, so is it a big deal? That's what I want you to ask yourself. Or some of you might be asking right now, hey, is it a big deal? Yes or no? Well, the answer is yes. It's a huge deal. It's a huge deal. And why? Because it's all about timing and premium. And again, these slides, you're going to see a lot of people talk about squeeze, and they're going to talk about the same concepts. But I'm trying to deliver this message before we go look at the charts in my way, so you can get it if you're still struggling. But timing and premium, so let's think about that. So when a stock is in a squeeze, the options on both sides of the option chain are at their cheapest. They're lowest in volatility. Before we get into the different colors, so let's back up and talk about that. So you've got the calls and you got the puts. So one of the advantages are on the premium. It's cheaper. When the volatility is contracting and it's quiet, the options are getting cheap. So if you're going to be a buyer of an option, for example, it allows you to get in when it's at the cheapest. Now, if you notice, I put red, orange, and black. For those of you that have the Squeeze Pro, and again, I love the Squeeze Pro, check down below. I'm an affiliate. Check down below for all the amazing bonuses that you're going to get. But I feel like if you don't have the Squeeze Pro, you're missing out. And why do I say the Squeeze Pro? The regular squeeze gives you the red dot, right? When you get a red dot on the chart, that is showing you that period of time where it's contracting, right? It's that rubber band is getting tighter and tighter and tighter. Now, orange, for those of you that have the Squeeze Pro, the orange it's at its tightest. So that is when the options are at their cheapest. So if you wait for that orange dot, you can pick up the premiums at even a cheaper. Now, I have a black dot. So depending on when the black dot comes, okay, you can do it before or at the end for those of you that know the Squeeze Pro, but the black dot is called that low compression squeeze. And again, options are still cheap. Options are still cheap, but they might be a little bit more expensive than the red. And so in this particular, example, I just want to illustrate. And again, these slides, you'll probably find these all over the place. Just want to illustrate that whenever a stock is in a squeeze, that is the cheapest time to buy because the volatility is at its lowest, and if you're in the orange squeeze, it's the low of the low. So now let's talk about timing. That was premium. So with the right timing, using the squeeze indicator allows you to take your position when things are quiet before the breakout or breakdown takes place. Why does this matter? Okay, let's talk about it. So again, you notice I have premium and timing. So with the squeeze, it allows you to take your position, right? Build your position, as some people would say, whenever things are quiet, when it's just cheapest. So from a timing standpoint, it's huge because the squeeze by definition is telling you that it's setting up for its next big move. This is our edge. It's that moment in time where it's telling us visually on the chart, hey, I'm setting up for my next big move. Don't you want to get in before that happens? That's how we make our money, right? Before. And it matters because you'll see, I'll talk about it on the next slide. I don't want to give it away, but I just want to drill in this point. Okay, I want to drill in this point. We are, from a timing standpoint, we're getting in at the best of the best of the best time before it fires. Okay, and the only thing we don't know is, again, which direction is it going to fire? All right, so let's go to the next slide. All right, buying an option inside the squeeze. So let's talk about the first point. During the squeeze, options on both sides are cheap. We just talked about that. Once the squeeze fires, all right, releases that energy, the options gain value from the move and volatility spike. So if I am in a squeeze, let's say the trend is up, I buy a call option when it's its cheapest because it's in a squeeze. that squeeze fires, I'm going to take advantage of that directional explosion, again, assuming it fires in our direction, and then volatility spike. Because remember, volatility is at its quietest, bam, it explodes, it inflates the options, we make money, right? We just got to pick the direction, right? So when you buy the option before the move, you're picking them up at the cheapest time possible. We talked about that. I'm drilling this home for you. So when a spike in volatility occurs and that premium inflates, we're going to benefit tremendously, because what's going to happen is, let's say we buy an option at $1 and all of a sudden, boom, it fires and it expands to $2. Obviously, that's going to help us because we want to buy cheap, sell high, right? We're buyers. We're not a seller in this particular case. So there is multiple advantages of buying the stock in the squeeze. And this is the main point, other than we know it's about to have a big move. So another benefit is that you already, so another benefit to this is that you already, what other feels like they're missing, so you already are in the trade, and what happens is when that volatility, boom, explodes and the stock starts taking them off, have you ever heard of the term FOMO? Fear of missing out. That's when the panic sets in and people start scrambling and they buy. Well, you're already in the trade. You got into the trade when it was setting up for its next big move before the FOMO kicks in. You're way ahead of the game. And since, again, it says when your contracts are in high demand, you can sell into strength. So when everybody else is FOMOing in, that's when we, who positioned properly, can sell to them. Sell into strength when they're buying into, they're buying into this strength, and usually what happens is they catch the move right before it's about to drop. So when everybody else feels like they're missing out, we're already in the trade. This is so important, okay? And again, a lot of you understand this. I get it. But a lot of people that are watching my video right now might be brand new. You might not have a strategy that you like. This might be your strategy. All right? I think we got another slide here, so let's go ahead and jump into the next slide. Oh, nope, that's the last one. So let's just kind of figure out, we're going to go to charts. Remember, take everything that we've learned so far, and now we're going to go into the charts, and we're just going to start looking at charts, and we're going to talk about these concepts. So let me pull up the chart. All right, so let's look at MS. Now, I just want you to know ahead of time, I don't have any charts planned. We're just going to go through some of the stocks that I have in a watch list, and we're just going to talk about the squeeze, and a lot of them we're going to look back at previous examples, so they've already happened. But again, I want you to see what we just illustrated in the slides. Now, I've got 3 indicators on my screen. 3 indicators: the TTM Squeeze Pro, the Ready, Aim, Fire down at the bottom, Ready, Aim, Fire Pro, and then I've got the Forecast Pro in the middle, which the Forecast Pro is not available yet, but it's coming very, very soon. So let's just start off with MS. And we went back for a year, and what we're going to do is we're going to identify these periods of time when there's a squeeze. Now, I will stress this, on the Squeeze Pro, the black dot is a low compression squeeze, okay? Low compression. The red dot is the normal squeeze. So for those of you that just have the TTM Squeeze, that's the red dot. The greens are the same. It's when it fires. So we talked about in the slide about the squeeze firing. That's when it's green. The orange is the high compression squeeze. It's when volatility is at its cheapest, right? We were talking about positioning in there. So look at MS. The first thing that I always point out to the traders that are in my school is we focus on the direction of the trend. Now, one of the things that we don't know is which direction is the squeeze going to fire. Now, there's a lot of stuff that we talk about, little things that you can use like this Forecast Pro, the Ready, Aim, Fire, the C waves, to get you a better idea of what direction it might fire. But I just want you to think visually. In an uptrend, the probabilities are in your favor if you play the squeeze firing in the direction of the trend. It doesn't always fire in that direction, but for a beginning trader, that is the easiest way. So for example, Morgan Stanley's heading up, and I want you to look at this period right there, right? So it's showing you that moment in time where volatility is contracting. Look, the Bollinger Band, now I have the Bollinger Bands. I don't have the Keltner channels, but if I did, the Bollinger Bands will be inside their Keltner channels, and it's at its quietest. And then look at this orange. You can see these Bollinger Bands are narrow. That is the cheapest of the cheapest to buy. And then look, squeeze, bam. So that was the release of energy, right? That rubber band, bam, or that sprinter taking off, right? That release of energy and explodes. So what we can do is we can position size when we are inside the squeeze. So like right now, we're setting up for a squeeze. It's a low compression squeeze. So if this stock drifts down here and this turns to red, now what's happening is the volatility is starting to contract. It's becoming cheaper and cheaper to buy. So let's go look at some more charts. And again, I don't have anything planned. I just want to flip through these and share with you, kind of previous examples. We'll go back in here. Okay, look at right here. Look at this period right here. Bam. So you had green to black, right? Because what's happening is the volatility is starting to contract. And so when it goes from green to black, it's telling you, hey, we're about to take a break for a period of time. Get ready. And then it goes from black to red, right? So it's getting smaller. Now this one never turns into orange, but then it goes back to black. But look at this period of time right here that it was channeling. Okay, it was channeling. So that is that moment in time. Again, you had this whole time to position size into this squeeze before, bam, it fired and you took profit. Again, think of all the stuff that we just talked about. Look, even right here, in a squeeze, bam, it goes. Now, also for those of you that are brand new, at the bottom, I've got this Ready, Aim, Fire. Okay, the Ready, Aim, Fire is also by Simpler Trading. It's the Ready, Aim, Fire Pro. My bad, it's the Pro. I love the Ready, Aim, Fire Pro. And there's a couple things going on. But again, you can look at these arrows. You guys know from my videos, the red ready and the green ready, they mean something. This purple line means something. And so for those of you that are good with the Ready, Aim, Fire Pro, you can also use that to your advantage. Pretty soon when I start talking about the Forecast Pro, it's going to give you even an additional advantage into the squeeze fire. But let's go back. Another period, right? And again, we're going back. We're going back in time, but look at this period right there. So it went, look at this. It went from fired, took a break, pulled back. So the sprinter finished the 100-yard dash. Now they're walking back to take a break. And then it's in a squeeze. They're sitting down, eating their food, whatever they got to do to regain the energy, right? Regain the energy before they jump in again. Bam. So right there, right, you got the trend up. And you guys know I use the 8 exponential, 21 exponential, 34. Trends up in a squeeze. We got us a Ready, Aim, Fire arrow. We're strongly bullish on the Forecast Pro. We had an intermediate confirmation. So all these bullish signs, bam. We position size in the squeeze for everything that I talked about in the beginning. So make sure if you're unclear, you go back after you're done with this video and after you subscribe to the channel and hit that little bell to be notified, revisit those slides. Look at right here, taking a break. Sideways action, right? Symmetrical triangles, channels. It's building up for its next explosion. So look at right now. So this is real time, JP Morgan. We're in an uptrend. We're in a squeeze. We're in a squeeze. So we're weak bullish, but we're still bullish. So again, you can pick it up now or you can wait until it pulls back a little bit. Maybe let it pull back down to this 34. Maybe get this one in a red squeeze, and then there you go. That's the time to position. Again, that moment in time, this is the best setup, okay, for at least beginning traders because it's visually appealing, right? The squeeze is showing us and giving us an edge. So let's just kind of go down again. Look at Duke. Duke was in like an eternal squeeze right here, building up pressure, building up, and bam, it fired. So if you would have just played in the direction of the uptrend, when things are quiet, boom, explosion. Look at it now. Let's go look in real time. The trend is still up, but there are clues. There's clues with me looking at this that at least are starting to tell me, hey, wait a minute. Maybe this isn't a squeeze I want to trade to the upside because the green line on the Forecast Pro didn't cross the 50. It's angled down. The ready, aim, fire just gave you a red thrust bar and an arrow pointing down. And we're breaking the 50 and the momentum shifted to the downside. If you guys notice, this is very subtle, but the red changed to black. So what happened is if you have the old squeeze, there's no black. Yours fired. Today, Duke Energy fired to the downside on the regular squeeze. On the Squeeze Pro, it went from red to black, so it's still in a squeeze, but it's a low compression. So there are signs, warning us, hey, wait a minute. This is a nice squeeze. We're building up pressure. I know it's setting up for the next big move, but which direction is it going to go? We don't know, but the signs are starting to show us that this one could be firing to the downside. And we'll go look at one more. Let's just go to Walmart. Again, Walmart. So Walmart, look at this. Period of time where it just consolidated. Now, this did fire. It faked a lot of people out, and then bam. But again, just visually see. Because look what happened. We jumped right back in a squeeze. And then actually, look at this. Let me kind of get it where you guys can see it. We still were in this like eternal squeeze, right? Volatility contracting, getting quiet, setting up for its next move, and then bam, target, explosion, game over. Well, what do you notice now? Walmart is setting up right now. It's in a squeeze right now. Okay, now it's a 4-dot squeeze. I like whenever it's 5 dots, but hey, it's setting up beautiful. The trend is up, and so since the trend is up, our assumption is this is going to fire to the upside. We don't know, but so far the green line is above 50. This is hanging out at the 50 mark. We do have a green ready, so the green is telling us, hey, wait a minute. We're kind of going down, but get ready. That's what the green ready. For those of you that want to learn more about the Ready Aim Fire Pro and is it worth it? Go search through my library, Ready Aim Fire Pro Worth It. And you'll be able to see I talk a lot about that. Plus, down below, I do have a link to that indicator if you get it through me, and I'm going to hook you up, okay? So, just going back, and let's kind of finish this off here. Let's go back. TTM squeeze, right? Entering consolidation. It's that rubber band. Is it a big deal? You betcha it's a big deal. It's a big deal because premiums are cheap. We can get in, and we're timing ourselves before the next explosion. Before everybody else jumps in. Okay? So buying inside the squeeze is the way to go. Now, the next question is, hey, when do I buy inside the squeeze? Well, inside my Options Elite course and my live coaching, I go into specific details about when I buy into the squeeze, what options I select, how much time, and all that good stuff. But again, for any of you that watch the squeeze on the internet, they'll talk about buy zones, right? There's no right or wrong answer, but just as it's coming down into a threshold that you can get a good risk to reward, because that's the whole name of the game, right? Good risk to reward. That's when you can buy. But I give my exact rules inside the school. So, all right, everybody. I hope you enjoyed that video lesson on how to trade the TTM squeeze, the best setup for option traders, beginning, intermediate, and even advanced. If you're interested in any of the indicators, down below, check them out. I'm going to hook you up. If you buy it through my link, you help me, I help you. And then if you're interested in my courses, down below you should see all that information. And you can always, of course, message me. Y'all have an incredible day. Hey, subscribe, make a nice comment if you enjoyed this video, and we'll see you